Bismillahirrahmanirrahim. Assalamualaikum. So today we are going to present the assignment financial reporting. My name is Muhammad Adib Hilmi bin Muhammad Junaid, and my other two members is Ahmad Haziq, Haziq Farhan, and Iman Zul Hakim. So we go to the first slide. Introduction to the selected MFRS. So we all agreed to choose MFRS 116 and 140. So what is MFRS? The Malaysian Accounting Standard Boards established the Malaysia Financial Reporting Standards Framework, which went into effect on January 1, 2020. This prepared statement must adhere to the recognized accounting standard established by the Malaysian Accounting Standard Board, generally known as the MASB for short. So, the foreign firm listed on the Malaysian Stock Exchange may prepare financial statement or report in conformity with internationally recognized accounting standard. So, what is actually MFRS 116? MFRS 116 is a property, plant and equipment. MFRS 116 are tangible assets that are held for use in the production or supply of goods or service, for rental to the others, for administrative purpose, and are expected to be used during more than one period. The objective of the standard is to prescribe the accounting standard for property, plant and equipment and change in such investment. So, we go to the MFRS 140. MFRS 140 requires all entities to determine the fair value of investment property for the purpose of either measurement if the entity used the fair value model, or disclosure if it used the cost model.
My name Muhammad Azif Farhan bin Samsudin. For the definition of terms, investment property is property, land or building, or part of a building or both, held by the owner or by the lessee under finance lease, to earn a rental or for capital appreciation or both, rather than for use in the production or supply of goods or services, or for administrative purpose, or sell in the ordinary course of business. Therefore, an investment property generates cash flow independently of the other asset held by entity. This distinguishes investment property from owner-occupied property (OOP). Next is fair value, means the amount for which an asset could be exchanged between knowledgeable, willing parties in an arm's length transaction. Lastly, OOP refer to property held by the owner or by the lessee under a finance lease for use in the production or supply of goods or services, or for administrative purposes. The different MFRS and MPERS. First one is the MASB published the Malaysian Private Firm Reporting Standard MPERS in February 2014, setting a new standard for financial reporting of private entities in Malaysia. Meanwhile, private entities now have the mention of continuation to use the existing private entity reporting standard PERS framework, applying the MFRS framework mandatory for non-private entities, except transitioning entities, or migrating to the new MPERS framework by 1 January 2016. For the depreciation is based on the cost of an asset less its residual value. Significant components of individual asset are assessed, and if a component has a useful life that is different from the remainder of the asset, then the component is depreciated separately. My name is Iman. I will explain about the recognition and measurement. Items of property, plant and equipment are measured at cost less any accumulated depreciation and any accumulated impairment loss. Cost includes expenditures that are directly attributable to the acquisition of the asset and any other costs directly attributable to bringing the assets to working condition for its intended use, and the cost of dismantling and removing the items and restoring the site on which they are located. Example 2 for CJ Century disclosure. All items of property, plant and equipment are initially recorded at cost. Subsequent costs are included in the assets carrying amount or recognized as a separate asset as appropriate only when it is probable the future economic benefits associated with the item will flow to the group and the company, and the cost of the item can be measured reliably. For the recognition and measurement, an item of property, plant and equipment is recognized upon disposal or when no future economic benefits are expected from its use or disposal. Any gain or loss arising on the recognition of the asset, calculated as the difference between the net disposal proceeds and the carrying amount of the asset, is included in the profit or loss in the year the asset is recognized. Who should choose for Empress? First, small and medium-sized enterprise (SME), focusing on cost cutting, less compliance costs involved compared to MFRS. Second is small SMEs that do not intend to go public in the near future.
Who should choose MFRS? First is the company with holding company that needs to prepare a group consolidated account with full FRS standard, easier for consolidation and no major adjustment is required. Company planning for IPO. Differences between MFRS and MPERS 116 and 140. PPE. MFRS Section 17 applies a component approach to separately recognize and account for each significant part of an item of PPE. Initial measurement is at cost. Enhancement principle of a subsequent expenditure is not relevant. Each significant replacement is a new component of an item of PPE. Subsequent measurement is at cost of the value amount less accumulated depreciation and accumulated impairment losses. Option for revaluation model is introduced in the amended MFRS MFRS 116. Applies a component S approach to separately recognize and account for each significant part of an item of PPE. Initial measurement is at cost. Enhancement principle of a subsequent expenditure is not relevant. Each significant replacement is a new component of an item of PPE. Subsequent measurement, a policy choice by class to measure PPE at 1. The depreciated cost model, or 2nd, the depreciated revaluation model. differences between MFRS with MPERS 116 and 140 for investment property IP. MFRS Section 16 subsequent measurement, an IP whose fair value can be measured reliably without undue cost or effort shall be measured at fair value through profit or loss. All other IP shall be accounted for as PPE using the depreciated cost model. Measurement is not subject to a consistent policy choice. Transfers, if initially on a fair value model, and a reliable measure of fair value is subsequently no longer available, without undue cost or effort, account for the IP as PPE until a reliable measure of fair value becomes available. The carrying amount of the IP on the date becomes the segregate cost. This is a change of circumstances, not a change in accounting policy. MPERS MFRS 140. Land and building, or both, or part of land or buildings, include interest in an underlying operation, lease asset. Subsequent measurements, an accounting policy choice to measure IP at the fair value model or at the cost model. Requirements include transfer from IP to inventories or to PPE and vice versa based on change in use. Classify that if any entity had used the fair value model, it is highly unlikely that a change to the cost model would result in a better presentation. The conclusion. In a nutshell, this assignment has taught us that the MFRS has been really improved the Malaysian financial reporting because it complies fully with the IFRS. Though there have been a lot of debate whether the MFRS really does work, but even with the obstacles that have been faced, we know that the MFRS system is the best system we have right now. MFRS 116 and MFRS 140 is some of the examples of the Malaysian Financial Reporting Standards Framework. With the growth of the firms in Malaysia, we have known it is possible that in the future we might have a new standard for the accounting standard.